What would you do with $1,000 right now? Before you spend it on something that won't last, let's explore how you can flip that cash into real profits, fast. Welcome to today's video, where we'll be exploring some of the most effective ways to grow and multiply $1,000 fast. Whether you're saving up for something big or just looking to build your wealth, $1,000 can be a great starting point if invested wisely. The key is making smart choices without taking on too much risk. In this video, we'll walk through various strategies, from investing in the stock market and real estate to developing side hustles and learning new skills. The goal is to provide you with clear, practical steps that you can use to turn that $1,000 into much more. So, if you're ready to see how your $1,000 can grow, keep watching. We've got some great options coming your way. Chapter 1. Set a strong financial foundation. Before you start thinking about how to multiply your $1,000, it's important to set a strong financial foundation. The first step is to pay off any high-interest debt you may have, like credit card debt. Think of it this way. If you're paying 20% or more in interest, clearing that debt gives you an instant return on your money by saving those interest payments. This is one of the safest and most effective ways to grow your wealth. Next, you'll want to build an emergency fund. Life is unpredictable, and having a safety net will keep you from going into debt or dipping into your investments when something unexpected comes up, like car repairs or medical bills. Financial experts recommend saving at least 3 to 6 months' worth of living expenses. You don't have to build this fund all at once, but starting with your $1,000 can provide peace of mind. Once you've cleared high-interest debt and set aside some money for emergencies, you're in a much stronger position to invest and grow your wealth. Think of it like laying the foundation for a house. Without a strong base, anything you build can easily collapse. By handling financial basics first, you create a stable platform that will allow your future investments to flourish. This step might not seem as exciting as jumping straight into investments, but trust me, it's crucial for long-term success. Chapter 2. Invest in the stock market. Once your financial foundation is secure, it's time to start growing that $1,000 through smart investments. One of the best places to begin is the stock market. Specifically, investing in an S&P 500 index fund is a proven strategy for long-term growth. The S&P 500 tracks the top 500 companies in the US, offering you immediate diversification. Historically, it has averaged around 10% annual returns, which means you could potentially double your money in just a few years. For those who want to invest in individual stocks, but can't afford full shares of expensive companies like Apple or Amazon, fractional shares are a great option. This allows you to buy a portion of a share, making high-value stocks more accessible without needing thousands of dollars. It's a low-cost way to start diversifying your portfolio with big-name companies. If you're looking for even more hands-off options, consider a robo-advisor. Robo-advisors use algorithms to build a diversified portfolio based on your risk tolerance and goals. They handle everything from choosing the right mix of stocks and bonds to rebalancing your portfolio over time. It's an ideal option for new investors who want professional-level management without high fees. Remember, the key to investing in a stock market is patience and key. This isn't about quick wins. Even during market downturns, the stock market has proven to recover over the long term. Regularly adding to your investments, even in small amounts, can help compound your wealth and build a strong financial future. Chapter 3. Real estate investments. Real estate is another excellent way to grow your $1,000. And you don't need to buy a house or a large sum of money to get started. One popular option is real estate crowdfunding platforms, like Fundrise or Realty Mogul. These platforms allow you to invest small amounts in commercial or residential properties without directly owning the property. It's an easy way to get a piece of the real estate market, and returns can be substantial over time. Another strategy is investing in real estate investment trusts, or REITs. REITs are companies that own, operate, or finance income-producing properties, and they are traded on major stock exchanges, like regular stocks. By investing in REITs, You can earn dividends from real estate without the headaches of property management. This provides you with both income and potential appreciation in value, all while keeping your investment liquid. For those who want a more hands-on approach, real estate contract flipping is an option. This involves finding distressed properties, securing a contract to buy them, and then selling that contract to a buyer at a higher price. It's a low-cost way to profit from real estate without having to renovate or manage properties yourself. While real estate can offer high returns, it's important to consider your risk tolerance and time horizon. Real estate markets can fluctuate, but with the right strategy, your $1,000 can grow significantly in this sector. Chapter 4. Invest in yourself. One of the smartest investments you can make with $1,000 is in yourself. Whether it's developing a new skill or gaining a certification, investing in your personal growth can lead to long-term financial benefits. For example, learning digital marketing, coding, or data analysis can open up new career opportunities or even allow you to start a side hustle that brings in extra income. Online platforms like Udemy or Coursera offer affordable courses in high-demand fields. Many of these skills are in industries that pay well and have significant job growth. For instance, digital marketers can earn an average of $60,000 annually, while entry-level coders make similar figures. This return on investment is much higher than most traditional financial investments. If career growth isn't your focus, investing in your health or well-being can also pay dividends in the long run. You might use the money to take a fitness course, improve your mental health, or hire a coach to help you achieve personal goals. These improvements can lead to higher productivity, greater job satisfaction, and overall financial stability. Chapter 5. Peer-to-peer lending and digital assets. Another way to multiply your $1,000 is by exploring peer-to-peer or P2P lending and digital assets. P2P lending platforms like Lending Club or Prosper allow you to lend small amounts of money directly to individuals or businesses in need of loans. In return, you earn interest on the amount you lend, often at rates higher than traditional savings accounts or CDs. With P2P lending, you act as the bank, providing microloans and getting steady returns over time. However, it's important to diversify across multiple loans to minimize risk. On the other hand, digital assets like cryptocurrencies have gained popularity for their potential high returns. While the crypto market is volatile and comes with significant risks, allocating a small portion of your $1,000 to establish digital currencies like Bitcoin or Ethereum could yield significant rewards. Many platforms such as Coinbase and Binance allow you to start with as little as $10, making it easy to get started even with a small amount of capital. However, with both P2P lending and cryptocurrencies, it's essential to do your research and understand the risks. Cryptocurrencies, in particular, can experience drastic price fluctuations, and while some investors have seen huge gains, others have faced losses. Chapter 6. Low-risk investment options. If you're more cautious and looking for low-risk ways to grow your $1,000, there are still plenty of options. One of the safest places to park your money is in a high-yield savings account. While the returns won't be as high as other investments, they are guaranteed, and you maintain easy access to your funds. Many online banks are offering interest rates that are significantly higher than traditional savings accounts. Another option is certificates of deposit, or CDs. With CDs, you agree to lock your money away for a set period, usually between 6 months and 5 years, in exchange for a fixed interest rate. It's a safe way to earn a predictable return over time, but the trade-off is reduced liquidity compared to savings accounts. These low-risk investments are perfect for those who want stable, guaranteed growth without the ups and downs of the stock market or real estate. As we wrap up, remember that growing $1,000 into something more requires smart decisions, patience, and a bit of creativity. Whether you decide to invest in the stock market, real estate, or even yourself, the key is to choose strategies that align with your financial goals and risk tolerance. The most important thing is to start today. Even with just $1,000, you have the power to make smart financial choices that can grow your money over time. Thanks for watching, and don't forget to share your thoughts and questions in the comments below.